Good afternoon, and welcome to the CFDA's Professional Development Series, Transforming the Fashion Industry Through Equal Access to Capital. I'm Sasha Brown, the Director of Professional Development, and today we're discussing funding disparities for minority-owned businesses.
And I'm Ebony Wiggins, Consulting Director of Talent Relations and Equity Initiatives of CFDA's Impact Program. This three-part webinar series will address the systemic barriers that minority-owned business founders face. In the last decade, over 50% of businesses were founded by minorities. Yet there's a serious lack of funding and investment opportunities accessible to this demographic. The business landscape has seen over 60% of Black women entrepreneurs self-fund their businesses, and banks are declining 53% of financing applications submitted by African-American entrepreneurs. The experts who are joining these webinars will share insights into the opportunities and resources minority-owned businesses can utilize to navigate these challenges.
Now, before we begin, just a friendly reminder that we'll be holding a Q&A at the end of the hour. So please feel free to submit any of your questions via the Q&A box for experts to answer, and we'll get to those a little later. Now it's my pleasure to introduce you to Felita Harris, who will be leading this webinar series for us. Felita has served in senior positions, including those of Chief Strategy and Revenue Officer at Harlem's Fashion Row, Icon 360, Executive Vice President of Alexander Wang, and Senior Vice President of Donna Karan Collection. In 2020, she earned a certificate from Cornell University in Diversity and Inclusion. Her philanthropic efforts are focused on supporting organizations that empower women and provide economic relief to marginalized communities. Felita is a founding member of Raise Fashion, a nonprofit network of fashion industry leaders that provides pro bono consultations to Black-owned businesses and individuals. Additionally, she is a thought leader for Open to All, a nonprofit organization dedicated to the principle that everyone should be welcomed regardless of race, ethnicity, national origin, sex, sexual orientation, gender identity, immigration status, religion, or disability. So thank you so much, Felita, for joining us for this first conversation and the following ones, and I will pass it over to you.
Thank you, Sasha, and thank you all for participating in this webinar series. It is incredibly important, and we have gotten great response from doing this. And I'd first like to thank the CFDA, Sasha, Ebony, and Lauren for organizing this important discussion. Today, we have 4 panelists joining us who are all experts in the areas of capital investment, technology, branding, and education. They will address the historical challenges in obtaining financial resources, the impact that this is having on brands today, and provide a roadmap ahead. So whether you are a new entrepreneur, an early stage business, or have raised capital, this conversation is for you. We will try to leave 15 minutes at the end for the audience Q&A. Our panelists are Ibeda Wadud, Sutien Dong, Shane Kelly, and Dr. Jonathan Michael Square. Welcome, panelists, and thank you for lending your expertise to this important conversation. So let's begin by having each of you introduce yourself and tell us about your organizations. We'll start with you, Shane.
Thank you, Felita, and thanks to the CFDA for convening this important conversation. So I am currently founder and CEO of Cinematica Labs. Cinematica Labs, what we do is we build entrepreneurial ecosystems toward a more equitable economy. And the way we think about that equitable economy is moving towards centering people and the planet, right? So we're building the grassroots models from the ground up of entrepreneurship, capital allocation that will facilitate that future economy that we want to build too. My background is as a tech entrepreneur, as a funder. So I've been an investor in about 25 tech startups through. So I've been an investor through angel syndicates. I've been an investor, a fund manager at a venture fund. So I've just done a lot of the different things when it comes to investing in companies. Prior to that, I spent 10 years in the film industry, financing films. I did about 300 million at the box office. During that time, I also helped a designer who was navigating factoring and all of the really limited financing options that are available when you're literally trying to get, your wholesale orders shipped to a major big box fashion retailer. So that's kind of the breadth of my background that brings me to this. So thanks so much, Felita, for having me.
Thank you. Ibeda.
Hi, everyone. My name is Ibada, and it's okay, Felita.
No, we practiced this a million times. Ibada.
Thank you so much for having me, Felita, for hosting and moderating, and to the CFDA. My name is Ibada Wadud. I am the founder and head of impact at Lula. We've been recognized as a lifestyle brand focused on fine leather good accessories by the Mayor's Office of Criminal Justice for groundbreaking work with formerly incarcerated citizens, where we focus on workforce development to build a pipeline of sustainable careers in the fashion industry. I'm also an assistant professor of strategic design and management and a part-time faculty in the School of Fashion at Parsons School of Design at the New School. And I wear many hats. I'm also a consultant focused on executive consulting in the areas of equity and sustainability. Currently, I work with the team at Adidas, Design Communities and Culture team. And prior to the current work that I'm doing, I consulted for the United Nations and managed corporate social responsibility at Kate Spade in New York and Rwanda. I studied design and have a background in design and public policy at Rhode Island School of Design, and I'm super happy to be here.
Thank you. Sutian?
Great. Hi, everyone, and thanks for joining, and I'm super excited to be here. So my name is Sutian Dong. I am a partner at Multitudes, where we invest in diverse founders across Web 2 and Web 3. I would sort of encourage you to think about Multitudes as a venture fund that really focuses on investing in original thinkers, non-obvious ideas, right? Weird people doing weird things. And we like to invest in those companies and those projects at weird times of their funding cycle. I'm also the co-founder of the Global Women in VC community, which is the largest network of female VCs in the world, with about 4,700 women now across 2,500 funds, 200 different cities, 60 some odd countries now. And I've built my career, focused on investing in non-obvious ideas and in investing early in trends that I think were a little bit head scratchy at the time and have gone on to become sort of these big market movers, whether it was being early in investing in the New York City ecosystem or early in investing in female founders at First Mark Capital and Female Founders Fund, respectively. So, in my career, I've been involved in companies like Shopify and Pinterest, Billy, Soft Services, Coaster, Astrology, Planet Forward. Some of these names might be more familiar than others. Many moons ago, I was in fashion, so I was head of marketing for a fashion house called Millisol Ferrari that was based in New York. So super excited to be here. Super excited to talk about both some of the, I think, historical things that we've all seen in the industry, and hopefully have a constructive conversation on ways that we can move the ball forward.
Thank you. And Jonathan.
Great. Thank you, Felita, for that introduction. And thank you. I want to thank the other panelists. I'm looking forward to the conversation. And I also want to thank all 90 participants that are attending today. My name is Jonathan Square. I am a historian and a curator. Like Ibada, I teach at Parsons School of Design. I am the assistant professor of Black visual culture. Last academic year, I was also a fellow at the Costume Institute at the Met. And I also founded and run a digital humanities platform called Fashioning the Self in Slavery and Freedom, which explores intersections between histories of enslavement and the fashion system. It's a pleasure to be here. Thank you so much.
Thank you. And again, thank you all for participating. We have a lot of questions, so let's jump right in. In the last decade, over 50% of businesses founded were by minorities. Yet, we all know there's a serious lack of funding and investment opportunities accessible. So Jonathan, I'll start with you. Why do funding disparities exist? And has the needle moved at all since the economic and social unrest of 2020?
Yeah, I mean, like I said in my introduction, I'm a historian, so I have to think about these questions historically. And I really think the biggest barrier to entrepreneurship for minorities is lack of capital, which it won't surprise anyone in this Zoom or in this conversation that it has roots in slavery and colonialism. And I think the problem is that we often talk about historical oppression as if it's not shaping present day inequality. The reason why an entrepreneur of color may not have startup capital to launch a brand or a project is because of a lack of generational wealth. Many Black people, many descendants of enslaved people, the children or grandchildren of immigrants aren't able to take risks because they don't want to, possibly end up in financial ruin. The thing is that wealth allows you to take risk because if your business or your plan doesn't work out, you won't be sent into financial ruin. And I also think there's something about fashion that we need to talk about because you need a lot of capital on the front end to launch a fashion brand. And many fashion brands, even the storied European fashion houses, started as vanity projects. And people who launched these projects were more concerned about their creative vision and less about turning a profit. So I think those kind of projects can, operate at a deficit, but it's not something that's always possible for minority-owned businesses.
Thank you for that. And Shane and Sutian, what is the biggest misconception about funding disparities?
I mean, that's a good question, Felita. I think one big thing is a misconception about investors, actually. So one thing that I walk through with founders that are in our programs and my portfolio companies is to help them understand how investors operate, right? Because different investors have different intentions and different requirements. So a VC fund that has $20 million under management versus $200 million under management versus $1 billion under management have totally different targets, right? And the amount of capital they have to deploy and the kind of returns they have to return. A VC is often looking to make their entire fund back on any one investment, right? So you might say, well, hey, we're going to get to like $10 million a year business, $50 million a year business. It's like, okay, but if I have a $100 million fund, that's not meaningful to me at all, right? And I think that is one of the misconceptions that's like, to really, piggyback on what Jonathan said is that how do you bootstrap a fashion brand to the point where you can prove that not only you can get to 50 million, but you can get to 200 million in revenue. You can get to $1 billion valuation in the next few years, because a lot of funds that we look at that are backing these big fashion companies that are high growth, that's often their target, right? They're literally looking for that opportunity. So how do we, as Black people and as, people who are coming from these oppressed backgrounds, right? How do we have the ability, find the way to get from bootstrapping a brand and the designs all the way through to shipping those wholesale sales, right? Through to the next phase, right? And get to that hyper growth phase. I think that's one of the things that that I think can't be overstated.
Yeah, that's great. Yeah, Sutian?
Yeah, I mean, I definitely agree with what Shana said. I think one of the challenges in sort of looking for funding as an entrepreneur is really understanding the funding landscape and knowing that there's many different flavors of investors that exist. And one of one of the things that I feel particularly optimistic about from where I sit as mostly a tech entrepreneur, mostly a tech investor, is that the diversity of investors. Excuse me, I keep changing those words around investor and entrepreneur, but the diversity of investors is changing as well. And so, if you look at what's happened over the last 10 years within the investor landscape, there are certainly more and more funds that have been started by women and people of color, and then funds that have subspecialized in areas like fashion or e-commerce or direct-to-consumer brands. The challenge with this evolving landscape, though, is that as an entrepreneur who's looking for funding, it can be somewhat of a steep learning curve or a little bit of a black box in figuring out what's what. But really understanding, to Shane's point, what investors are looking for, what that particular investor is looking for, and then whether or not your business can be a fit for them and their returns that they're trying to generate with each investment, and also the stage of company that they're looking to invest in. I think having a understanding of the landscape or access to resources that help you understand that landscape can be helpful in sort of reducing the amount of time you spend in non-productive conversations and increasing the amount of time in talking to people who could be fits as investors for your business.
Yeah, great. And Ibeda, you've been on the front lines, this experience. So can you tell us what are the challenges that designers of color are facing?
Yeah, absolutely. This is going to be like our running joke, Felita. It's Ibada. And
don't listen.
Okay.
You have to give me some break.
We're just going to have to laugh about it. It's fine.
Love
it. But to answer your question, yes, I've been on the front lines, and I did, I did my due diligence. And I think that one of the things that entailed was ensuring that I really did understand the diverse types of funding that were available to me, and what made sense for my business model. And as Sutian mentioned, like the financial landscape, is quite diverse in terms of types of funding. And I think, that as a founder, that's something that's a very important exercise, right? But I think that to go further, it's also important to understand that there is a cultural aspect to this landscape of finance, right? That exists, and that also has, I think, is tied to a culture of generational wealth, right? Mm-hmm. And so, as Jonathan spoke about earlier, right? And so, these structures that exist that are really systemic structures, like family and raising a family and friends around, right? Like, or even, the culture of how best to meet investors and ask for introductions to investors, I think is really catered to and built around a culture of exclusivity, right? Mm. And so I think regardless of the evolving nature of the landscape in terms of diversity, in terms of types of funds that are being created, right? Like we've seen funds like Harlem Capital or Backstage or Fearless Fund emerge over the past several years. I think that it's really important and something that I'm really interested in and hearing investors commit to is to reimagine what these structures look like. Because if we're not willing to reimagine what the structures look like, we're just repeating the same harm, right? And literally the only thing that is different is the race or ethnicity of the funder. And I just think that hasn't been examined and scrutinized enough and discussed enough within the startup space, but particularly I think because the fashion landscape and our fashion systems are so challenging, and as Jonathan said, requires so much startup capital, that's particularly relevant for designers of color and for Black designers who are starting brands like myself. Founding Lula, I initially went out to Silicon Valley and participated in an accelerator, one that's quite prestigious, and met with VCs. And ultimately, particularly because we have a social mission, I was not comfortable committing to an investor and saying that we were willing to do whatever it takes to grow tenfold within 3 years, or whatever kind of like framing was required, because that's not how real life impact works. When you are trying to, for example, help people emerge out of poverty, or have any kind of social impact mission that is connected to your brand, like we do in my case, working very closely with returning citizens, right? And so I think that is sort of the dilemma generally of the social entrepreneur, but I think particularly one working within the fashion industry. And then the second part of that is the role of the investor and the role of thought leaders to actually do the work of reimagining this landscape altogether and the structures that uphold it.
Could I add on to that? So thank you, Ibada, for calling that out. I just want to put a finer point on some of the practices that we have on the investor side that really, I think are good examples of what you're talking about, right? One is, for a long time, and still today, I think, a lot of investors have this policy, right? Sometimes stated explicitly that I'm not going to meet with any founder that does not get an introduction to me through someone I trust. What does that do, right? If your networks are all a lot of people that look like you, that were educated like you, that grew up the way you did, then those warm introductions are explicitly biased toward your pre-existing network as an investor, right? And so a lot of work that we did at CrowdSmart and the Titan Fund, where we invested in seed stage companies, was we literally measured bias and then showed it to investors and to entrepreneurs. Because what happens when you are more aware of your biases as an investor, you become a better investor, right? Whether you're biased towards, certain industries, or, people that look a certain way, or people that talk a certain way, or come from a certain place, whatever it is, right? That we all have our biases, right? And so to the extent that you can become aware of them, one of them is that has been, explicit, like I said, is this idea that you have to get an introduction through someone I know and trust. That is a bias toward your own network, right? So I think that's one of those kind of systems that we don't always talk about that's actually becomes a barrier to some of us, right? Or an additional hurdle, I would say. The second piece is there's a practice in venture capital in particular, and we can talk about revenue-based financing, which is a viable path. We can talk about angel investing, family offices, foundations, grants, like crowdfunding, right? I think crowdfunding is a great path for a lot of fashion-oriented companies and brands in particular. But in VC in particular, I think, Felita, because you did ask about misconceptions, one thing that I think, I try to unpack for my students. So I teach a venture capital class at USC and at HBCU venture capital. And what I try to unpack is this idea that when you invest, you're investing with the anticipation that if you're a fund, if you're a sizable fund, like 100 million and up, you're investing typically with the idea that you're going to be able to invest again later and deploy more capital into that deal. One, right? In the near term, right? Like not 5 years from now, but in the next year or two. And two, you're anticipating that there are going to be other investors that come in and say, this is actually worth more than what you thought it was worth. And it's going to be worth more and it's going to be worth more. So a lot of subconsciously or subconsciously, I think as investors, a lot of times we're investing with the anticipation of like, what is this big fund going to do? Right? Is SoftBank or Tiger going to come in with a huge amount of capital and increase my valuation so much that I look like an amazing investor just based on the increases in valuation that come from these other investors? So I think a lot of times we have to unpack as investors, are we trying to anticipate what other investors are going to think, or are we just going from our own conviction? And I think it's something that we all kind of have to wrestle with and work through. But I think that piece is something I don't think founders have a lot of visibility to.
I'm going to ask you another question about the exit strategy and valuation, because we're talking about sort of like, the Black founders having or receiving 1% of venture capital funding and generating 150 billion in revenue. So how does all of that play when you're talking about exit strategy and valuation to actually get to some type of a financial investment? Shane.
Okay, I wasn't sure if Sutian wanted to take that one. I'm
Anyone.
gonna pass it to you as well.
Yeah.
So when I'm investing on behalf of a fund, a venture fund with venture economics, I'm betting that, like I said, a rule of thumb, any one investment I make can return my entire fund. And that's not one investment, actually, it's one company. So that I can invest in that company, invest more, and then get 100x or whatever it is that's going to return my fund. How do I get that return though? Right? Before I moved into venture capital and I was a founder and I was an operator, I didn't understand explicitly how those returns take place, right? Because I was scratching my head before I was in venture, like, why are people investing in companies that are not making money? They're not profitable. WhatsApp had zero revenue and had a massive exit and good outcome. The way that we do it is typically happens through a change of control, right? So there are some companies that retain the founder as the CEO through an IPO, but most companies are going to have a change of control at some point when we get our money back. How does that happen? The company either gets acquired by another company, in which case that company's in charge, right? And I get a nice return because they paid a pretty penny for that company, right? Or the company goes public and has an initial public offering, which is a fundraising event in which very often the founder has much less control after that of the company, right, than they would before, if they're even still around on the, as an operator or as a CEO. At that point, a lot of times it's not the case, right? I know a lot of founders who are just like, no, I'm not trying to be a public company CEO. I understand that's how I have to get my money back for my team and for my investors, but I don't want to be that public CEO, right? And so those are the two typical kind of exit strategies. And I think what you have to understand is that for a fund that has a life cycle of typically like 10 years, right? Some people are deviating from that and innovating on the life cycle. But we're looking at you like, all right, in the next like 5-10 years, are you going to sell this company or go public? What you doing? Right? That's kind of that is something that I think is explicit in our minds as investors, but not necessarily. I don't know if founders are really letting us sink in, right? Sutian, what would you?
Yeah, I think this is all to say that venture capital as an asset class and as an ecosystem, I think has done a really remarkable job over the last 20 or 30 years in putting venture capital out there as sort of the de facto way to raise money for a company. I would say, and you can, this is fairly and well written about online, but that venture capital is actually a very good model. I think Josh Kaufman says this, who's the founder of First Round, that venture capital is rocket fuel, right? And it's only good if you're trying to build a jet, right? A rocket. Otherwise, the fuel doesn't work so good for other companies. And that's something that's important for founders to understand, which is that venture capital as a capital source is only aligned with a specific subset of companies that can take that money that you raise from a VC and then take that $1 million check and turn it into 10, 20, 50, $100 million further down the line. And so understanding that and sort of coming to terms with, well, is this the kind of business I want to build, right? Is this the kind of exit I'm looking for? Is this a timeline I'm looking for? Am I comfortable with giving up control of my business over time to build into sort of a larger entity? Like, these are all questions that I think one should ask yourself before thinking about venture capital specifically as a funding source. Sort of the flip on that, though, is that if you look around the early stage landscape, and again, this is changing over time as more funds are innovating against sort of the traditional venture model, that there aren't that many capital sources for early stage companies, right? It's very hard to go and seek bank financing or any debt financing if you're going out to them and saying, hey, I have an idea for a business, you should fund it. That doesn't really work when you're looking for sort of traditional lines of debt. And so, I think one of the areas that should change is the sort of the evolution of funds, right? And the evolution of funds beyond what sort of pure play classical venture looks like. The question there, though, and it's something that we don't have to spend a lot of time here addressing, but something that, entrepreneurs should think about when they think about, I think the perspective of the VC specifically is that VCs also have limited partners, right? So funds themselves have investors as well. So they might be high net worth investors, family offices, public pensions, private pensions, endowments, foundations. So the list can be long, but they are beholden to provide some sort of return to those investors as well. That leads them to look for companies that fit in specific archetypes, right, of returns to invest in. And so I think in terms of, where the landscape is and how we should be thinking about funding, the opportunity in investing in Black founders, in women and women of color, I think is very much recognized by the industry. The challenge here is that we're running up against a lot of these systemic barriers, right, that prevent even funds who want to do things a little bit differently from raising enough capital from the institutional investor set.
Awesome. Well, let's talk about team. Like we've all heard the phrase teamwork makes the dream work. And behind every successful entrepreneur, you have a team of support in one form or another. So how does funding opportunities consider team alignment, size, operational support? How does that play into fundraising? And this is for the panel.
I'm happy to jump in. I mean, I think team, as an early stage investor, what you're looking at assessing is oftentimes when there's not a product out in market, it's less around product market fit, but it's around founder market fit, right? So are you the right quote unquote founder to tackle this specific opportunity? And the way that we think about it internally at Multitudes is looking for a couple of things that are consistent across the founders that we like to work with. One is a unique point of view about the world, right? That is not necessarily shared by everyone, but we believe we're convicted that it will be true over time. Two is a superpower, right? So something that you're extraordinarily good at that we think will power the business and be the lever up to the business growth over time. Three is an ability to sell. Right. So this goes back to some of what Shane was talking about when investors are thinking, well, will you be able to raise more money later from other people? Is can you recruit well, right? Can you sell your product to the market well? And then can you sell your vision to investors to raise capital for that well? And then the fourth is, I think, a long-term growth mindset, right? So the ability to be short-term wrong and to be to pivot, to take feedback such that you can optimize your business for success in the long term.
Great. Any thoughts on that, Jonathan?
Not so much in terms of team building, because I'm not really involved directly in investing. But I do think it's important to think about community. Something that Ibada brought up earlier that I think it's important is more unconventional ways of raising capital that minorities may have to rely on, whether it's crowdsourcing or relying on your community to provide sort of that startup capital.
And Ibada, when you think about your team, like limited resources and, trying to at least get your organization ready for funding, what is that experience like?
Sure. Yeah. I mean, I originally started and piloted my brand and also our social impact program with a hybrid, I would say, model of funding, raise a F&F round. And for the aspect of my business that was oriented towards social impact, I received municipal funding from the city of New York. For the aspect of my business that was product centric and focused on the design and the product that I wanted to sell, that came from private capital, right? And I think that this is relevant because more and more it's quite common to see brands that do have a social model or do have a sustainability slant, right? And I think as an industry, we're particularly not only should be focused on sustainability and social impact, but we're sort of urgently being mandated to from all sides, right? And I think that that's something that even now we're seeing investors value. And so for me, it was just, as I said earlier, really important to educate myself about the different ways that I could acquire funding. As Sutian alluded to earlier, there's not just this one way. And that was my learning experience from, going out to Silicon Valley and meeting with VCs was, this isn't the right fit for me right now. It's not to say that it might not be in the future. But I think that particularly that is relevant in the context of the fashion industry because, and this was a lot of the feedback that I received, is that I am not willing to sort of redesign and reimagine my entire brand so that my price point can meet something desirable to an investor. I'm not willing to slash my costing or the quality of my product to fit a sort of costing model that works for a particular investor in that moment, when I know that long term, there's value in other areas if I focus on those areas. So I think that was definitely an important learning experience and one that I've, sort of carried forward across the board in my work. And from a team perspective, I think it's really important to build community around your brand and people who believe in your brand. And that's what I've, been able to do, thinking of my team as members of my community and people who have particular skill sets and knowledge that I'm able to lean on and lean into, as opposed to this traditional conventional model of what it looks like to build a team within your company, right? But a lot of the time, those are external partners for me, right? If I'm focusing on material innovation, for example, I have a design consultant or a sourcing partner who I'm working with, right? So I'm not trying to fund somebody a full-time salary, right? There's ways that you also have to sort of be innovative, I think, particularly in our industry. And that has worked really well for me through partnership. But I also think that I just want to also stress that there is a balance in terms of thinking about and catering to these sort of new innovative models that do exist within the industry, where I think there could be more structural support.
Yeah, and Sutian and Shane, there are many ways to finance a business. So can you just walk us through a few options?
Yeah, I'm happy to share a little bit here. I also just want to plus one what Ibada said in terms of thinking about your team, because I've been on the entrepreneur side and I've been on the investor side. And most of the companies that I've started, and in particular the fashion companies that I've worked with, it was literally building a community of volunteers and advisors and partners to support you in that process. And that's something that so many, I think, we don't tell that story enough, right? About how you're pulling these things together and you're so scrappy as an entrepreneur. And that's the typical approach, right? And what we look at, we see someone that raised a bunch of money or that got to this outcome, and we don't see, like the Janice Bryant Howroyds of the world that like didn't raise any money. You know what I mean? It was a staffing company, but it's a $2.5 billion company now that she built in her lifetime, right? It's like, let's lift up those stories where it's like, I just started with like some customers, right? There's one fashion brand in particular that, the founder I was really close to, and he was working through it, and all these angels lined up, like millions of dollars lined up. As soon as you get a VC on board, all this funding is going to go to you. And the VCs were like, well, but right? And it didn't work out on the VC side. So he's like, all right, I'm going to raise a few $100,000. And then I'm going to sell my products to my community, right? And I'm going to only sell what I can manufacture in a batch, right? And I'm going to sell it before I go and actually complete the manufacturing of the product, right? So these novel ways of kind of front loading, your revenue. I think there are a lot of ways to think about that. One is just to think about it as pre-sales. Another one is to think about it as, a drop, right? Another way is to think about crowdfunding, right? There are, rewards-based crowdfunding that you can do where you're literally saying, hey, I've got my prototype product, right? I've got this dress, I've got these shoes, and I'm going to put it out there, and you can pre-buy it and you'll receive it in the next 6 months, right? But I need to go and sell that in advance to solidify the amount of revenue that I get and use that to actually manufacture and ship the product, and that can go well, it can go badly, right? So you have to be really careful about those approaches to really honor your customer. But, there are ways of doing that. And then another way of crowdfunding is literally if you have your community and they love your designs, there are platforms out there where you can raise from them at $100 per investment, right? There are platforms out there that you can go to and literally list your company out there. And if you have a massive community, the big problem there, the hard part is the marketing, right? And getting folks to actually invest in your company, because you need a lot of $100 checks, right, to get to a good place on funding. So if you have a massive community that's really engaged, that's a way that you can sell ownership stake in your business and retain control without committing to, hey, I need to grow to a $100 million business in the next 3 years or whatever the case may be for XYZ fund that has those commitments to their limited partners, to their investors. I think those are a couple of the ways that you can do it. I'm seeing some innovation around factoring, and they're really early right now, but I think that, as those platforms grow, like I encourage all of you who are out there who are technically savvy to really get into that space. I think it's a huge opportunity. I'm really looking for more innovation in banking receivables, banking POs, right? If I have this order from this big company, they're only going to give me a little bit up front, and that's not enough to get my manufacturing done. So we need, as investors, to innovate new models for that, to meet founders where they are. We've seen, Felita, you and I saw a situation like that recently, right? Where there's a designer that has incredible traction, and I just need to ship this product, right? I need to fund this big order. And there are not a lot of models even for that. And that's even for someone who's already accomplished, is already in some of these big boxes and has a much bigger order coming in, because it's not that interesting for a PE fund that wants to write a $50 million minimum check. And VCs can't do it because of their agreements to LPs, right? Banks can't do it. There's just a massive funding gap there that if we can underwrite those deals, we can move quickly. And we can support, I think, a lot more founders of color in particular, because we often, the data shows that we are often, and women in particular, are often, much more resilient businesses, right? Where prioritizing profits, like those profits will come in. You know what I mean? And so how do we start to really find those new mechanisms and structures to resource those companies? That's something that Cinematica, we think a lot about, right? And we convene folks to really be thinking deeply about what are those new structures?
Thank you. Sutian, do you have anything to add?
I was just talking to myself, apparently, forgot to go off mute. No, I think Jane did a great job of just talking through the both the options, the alternative options that are available, and the I think that the broader scale dynamics that we should change. We should all work collectively to change in this industry if we want things to sort of move the right way a little bit faster. A couple of things I would highlight is there are new models that have been propped up, like a Circle Up is a good example, right? Where it's sort of community-based equity funding, or Republic. And then a former colleague of mine, one of my former partners, at first, Mark started a company called Resonance, and they work with brands that I think generate more than $100,000 a month right now, but put them on a platform. And it's effectively, you can be a designer on this big platform that does the end-to-end manufacturing, fulfillment, marketing as well. And so I think there are interesting models being created, but this harkens back to something that Jonathan talked about earlier. These are really big problems that we're trying to solve, right? And I think the sort of speed at which the institutional capital is moving, which unfortunately I think we just still need to make sea changes, isn't moving very quickly. And so I think when we boil down to individual agency and what we can all do, it's really about creating the dialogue and the conversation, right, to change all of this stuff. Because there's really interesting entrepreneurs doing all sorts of things, right, innovating against the funding model, innovating against company creation, and that's awesome to see. It's a question of how do we highlight this, right? Mm-hmm. How do we surface these stories? How do we get people aligned? Investors, for better or for worse, many of them, definitely not Shane, but many of them are sort of followers, right? So you want to do things that are safe. You want to do things that don't get you fired, and that colors some of the decisions that people will make, right, around investing. It might not be the highest yield opportunity, but it might be the thing that lets you keep your job, or you think will keep your job. Mm-hmm. And so how do we create some of that narrative as well, right? And that exposure that these models are working, right? And then the alignment as an industry, right? And also as a community of people, of innovators, such that it becomes a sea change that's impossible to ignore, even for the biggest sources of capital.
Yeah, thank you. And I know we want to, engage the audience with their questions, but Jonathan, I have one final question for you. This is a systematic problem. So who is responsible for ensuring that designers of color receive equitable funding?
Yeah, I think it relies on all of us. Yeah, it's a collaborative effort. The CFDA, people in positions of power, institutions, the government, like it falls on all of our shoulders to make sure that we're supporting young up and coming designers, because it's the future. So I would say I wouldn't pinpoint on one particular person or one particular organization. I think it's something the responsibility should be spread across multiple institutions, individuals, investors, organizations, et cetera.
Great, thank you for that. And thank you all for providing your expertise and giving us all a bit more insight into this issue. Remember, this is the first part of a 3-part series on resourcing your business. So definitely sign up for the other webinars. I'll turn it over to Sasha for Q&A.
Thank you, Felita. So Our first question, actually, half of it has already been covered, which is wonderful in our conversation, but maybe we can address the latter half of the question. So, given the difficulty of scaling a business to VC scale on a VC timeline, can we discuss private investment from angels and family offices? So I know we did discuss different options, but also how to set up good boundaries and or do your diligence as a founder to ensure long-term alignment. That's for anyone.
So I can jump in. I have a a little bit of a inversion of that I think might be helpful, which is when you're trying to figure out alignment with investors, one thing that I have found is incredibly helpful when I've been on the operator, on the founder side, is thinking about, okay, I have this company I'm building. What does this company look like in 10 years, in 15 years, right? There's a company called TaxWiz that's working with our program Black Ambition. So Cinematica partners with Black Ambition, which was founded by Pharrell Williams, to close the racial wealth gap by supporting Black and Latinx founders. And one of the founders there was like, well, we have this amazing tax business, right? We're working in the Black community in the South, and we're building the software now. And I was like, well, who are the people that built the zeros and the QuickBooks and the other things? And where did they go after they left? If they were the early people at these massive successes, where did they go next? Where were those, those executives, those founders? If you can track those folks down, they will naturally understand exactly where your business is headed. And they'll understand what hurdles are laid out in front of you. And they can share with you the lessons that they learned, right? That's one way. If you meet with folks who have already built the kind of company that you're trying to build, those could be great investors because they've already succeeded in it. And they could be great advisors. They can just add so much value to your business. And you can have those real talk conversations about alignment, about long-term alignment. Like, I want it to be this. How did you navigate that? And kind of getting to alignment that way. And then one thing I also just have to, shout out, Felita, is one of the mentors within Black Ambition. You have started like Raise Fashion, which is literally supporting underrepresented fashion brands right now. So the models that we need are actually also being built, you know what I mean, by our moderator and the people in this room, right? So I just wanted to also just lift that up, because I think that's an incredible organization that you've built that is really meeting, underrepresented designers where they are.
Thank you for that, Shane. I will add, with Raise Fashion, it was really a community effort. To Jonathan's point, we had to enlist the entire fashion industry, from manager, director, C-suite level, to say, this is a problem. We need to, expand our network. We need to share resources and provide that thought leadership that is not readily available on these teams. So you're right, Shane and Jonathan, I think you bring a really good point to the community aspect of this.
Great, thanks. We have so many questions, so I'm sorry if we won't be able to get to all of them. But the next one is, if most investors request an introduction, what is the best way to approach or ask an investor for a meeting?
Yeah, it's a great question. I think, Shane, you mentioned this earlier, just around the challenges of investors being sort of warm introduction driven. I do think that's changing, especially amongst a new set of investors that are that recognize I think the opportunities that you miss when you only look within your networks. And so I do think there's a couple of things in terms of moving some of this forward. I do think that cold reach out does work, but it has to be contextual. It has to be within context, and it has to be relevant, right? So doing a massive email blast and saying, hi, so-and-so, I'm raising money for this business without knowing whether or not it might be a fit, right? Without doing research, seeing what they tweet about, what they've invested in on their website, what they say on their LinkedIn, et cetera. You're just going to get a low hit rate there. And then I think the thing to do is really to take advantage of every single conversation that you have, because people generally don't like saying no, right? It's not a great feeling to say, you know, to say, hey, I can't do this, I can't invest, I can't help you. And so people, I would say the general rule is that people do want to be helpful. Some are more helpful than others, of course, but if you get a no from an investor, the next question is, oh, are there people that I should be talking to that you can introduce me to, right? Can you introduce me to one other angel or one other potential investor? So I do think, gosh, how would I say? I do think that cold reach out works. And then once you have a toehold, right, into a couple of folks, leveraging their expertise, right, and then joining networks, and then again leveraging your community or joining fashion accelerators or what have you, like starting somewhere and then building from there.
Can I also add to that? I think it's important, like from a founder perspective, and also, you know, hopefully with some appreciation from an investor perspective, to actually embody the belief that you have something to add and that you are adding value. Because I think like even the framing of these questions sometimes sort of is like implying that like you need something from this person, as opposed to going into the situation and the conversation as though you have something to offer them. Like, I have an incredible investment opportunity for you, but you have to believe that, and that has to be true, you know? And so I think that if you understand what that opportunity is that you're presenting, you're also much more confident and also effective and able to have a sophisticated conversation. But I think that also, you know, like requires practice and requires like good mentorship and all of those things. But for me, that's been a personal experience that's been really important. And I also just want to say, like, I looked at the Q&A and it just seems like a lot of general questions about like, you know, just how do I get investment for a clothing brand? And I just kind of also want to generally say that what kind of brand is like a really important question to address. Like my brand is a brand that envisions itself as a heritage brand and a luxury brand. You can't build a heritage brand overnight. You can't like fund that overnight and like even expect that to become like the next, like Louis Vuitton wasn't built overnight, right? Chanel wasn't built overnight. So like Ralph Lauren wasn't built overnight. And so I think that there's also like a certain business sensibility that even a designer has to have to understand that and to understand what your market is. And as Suchian said a little bit, you know, earlier into this conversation, that like VC may not be for you, but like if you are creating this, like I have a friend who participated in Harlem's Fashion Row this year with LVMH, you know, and he's making like luxurious, embellished, beaded products, right? Like maybe your investor is like someone working in the art space, you know, like maybe that's who will appreciate and understand your product. And so I think it's also just like being open-minded about what that investment looks like and who that person is.
Thank you for that, Ivana. That's so helpful. And to everyone who's submitted a question that's really related to raising capital, our next session is completely dedicated to that. So I really hope you can tune in on October 13th. Felita will be with us again, Ivana will be with us again, and some new experts. And I promise those questions are going to be addressed, and there will be a recording of that conversation as well if you can't join us on October 13th. But we're at the end of the hour, so I just want to say thank you to Felita, to Jonathan, Shane, Ibada, Sutian, and my colleague Ebony for being a part of today. And we're really excited to continue about this and to share more resources. There were a lot of questions also submitted about, can you help connect me? Can you send me lists of resources, investors? And we will do our best to pull together as many links and contact information as we can, and we'll share that in a follow-up email later this week. So please keep an eye out for that. And once again, thank you everyone for joining us today.
Thank you.
Take care.
Thanks,
Thanks,
Thank
everyone.
you. Bye-bye.